Why this turned that way?
I'm just gonna have to keep my profile picture. I don't know why the video is sideways. Yesterday wouldn't even let me come on screen. Now it's crazy. Welcome, welcome, welcome. Of course, we'll get started shortly. This allows get your water if you need some water or coffee. We'll get started shortly. We'll get started in one moment. Get started. Welcome to day 2 of the Business Finances Mastery. This is your road to revenue. I would turn on my camera, but look at me. So I'm gonna keep my camera off because that's confusing to me. I don't know what's going on with Zoom. Yesterday it had me blacked out. Today it got me sideways. It's crazy. But I am going to go ahead and get started with sharing my screen. Welcome, welcome, welcome. And we're gonna dive right on in to day 2. Okay, so slideshow from my current slide. So today we will be unraveling accounting principles, okay? So right off the bat, let's recap yesterday. Yesterday, we talked about the importance of managing your business finances and your mindset around your business, right? Or around life, period, because how you think in life is what transposes to your business. That's what makes all businesses different, is you, right? So do you see the glass half full or half empty? Okay. So by the end of this challenge, I want you to have a mindset of glass half full, because you are not where you want to be and you are not where you're going to stay. Okay. You are going to continue to grow, excel, and make your business be exactly what you want it to be, even if it's just a concept right now in this minute. Okay. So if you think small, you're going to play small. If you think big, you're going to play big. So it's time to play big. Okay. We learned about the value of having a business coach and the fact that it'll give you a different perspective that you could use in your business, right? You take in what you want, throw the rest of it away, but it does give you an idea of what else can happen or what else can be in play or what else you could sell, right? And this also could be an accountability partner, but most of all, you get a coach for the different areas of your business that you need, and it will keep you from recreating the wheel. Okay. Like for me, I have a marketing coach, right? Because marketing is not my forte, right? So my marketing coach, I love how he does things, but I cater it to or make it my own, in essence, to follow my business culture, to follow the way we do things in business, because no two businesses are alike. So it's not like what they do is going to apply to my business 100%. So it's only going to be bits and pieces that I will use anyway, right? But having a business coach helps you in your journey and makes your journey that much easier. Okay. Then we dove into bookkeeping. Okay. Cash versus accrual. And then we looked at chart of accounts. So today we're going to actually be diving into the accounting side. So what exactly is accounting and how is it different from bookkeeping? So remember yesterday we talked about bookkeeping is the day-to-day activities, right? Recording your day-to-day transactions, okay? It could be recurring activities. It could be one-time transactions. It could be travel. It could be meals. It could be products, whatever it is. The bookkeeping and the accuracy of your bookkeeping ties directly to accounting. Okay. So accounting is the analysis of your numbers. Okay. So if your numbers are wrong because something is miscoded in bookkeeping, then you're analyzing your numbers incorrectly. An example, if you are looking to renovate a home. So I know we have some real estate investors, right? Let's say that you bought a home and you're looking to renovate it and you want to compare it to the last job that you did, right? The last house that you bought, fixed up and flipped, for example. Now, if the items that you spent money on to fix the house is misclassified, then and you're using that as your comparison, then you can overestimate or underestimate what this job could cost, right? And it could directly impact your profitability upon sale because those numbers are wrong. So accounting is when you analyze your numbers, you review your numbers to make business decisions. Okay. So you review your financial statements, right? You could review them monthly, quarterly, annually, do comparison. How was my finances this time last year? What did they look like? What is my highest revenue quarter, right? As compared to what is my highest net profit quarter or month, right? So accounting is the metrics itself, okay? And it allows you to make the business decisions that you need to move to the next level and the next level and the next level. Okay. So if your bookkeeping is wrong, your analysis is going to be wrong, your metrics are going to be wrong, and your financial statements are definitely wrong. So bookkeeping is the key to not only making business decisions, but it directly impacts your taxes because your taxes are prepared from your financial statements. Okay. So why is accounting important? Because how do you know what you're spending your money on? Right. So me as an example, I do not pull money out the ATM. I intentionally swipe my business debit card if it's for business or my personal debit card if it's for personal. Because when I would go and pull, I would always do the $40 quick cash out the ATM. And it dawned on me like I had went Monday and didn't have to go again Wednesday. I was like, where did that $40 go? I did not know where the money went. And that's how it is. Like money, it goes so fast. And there's always something that needs to be purchased or expensed or whatever. And you need to account for it. Right? It could be those one-time costs. So like 2023 has been running a havoc on me financially through my rental property, right? So it was so many different repairs I've had to do with my rental property. Granted, I won't have to do those repairs again for some years, right? But it was like, dang, where did the money go? Sorry, where did the money go? Because it was this. If it ain't one thing, it's another. So being able to run a financial statement, being able to look at your metrics, do comparisons from month to month, you could better plan for what's to come in your business, and even more so, plan on that big goal. So remember, I talk about begin with the end in mind. If you don't know where you are financially, how do you know when you're going to get there if you can't plan based on actual activity, right? Not what you think is going to happen or what you thought happened, but actual activity, okay? Every year you should create a budget. And if you use a software like QuickBooks, you can run a budget versus actual report, right? You don't have to send the budget off anywhere. It's for you internally so that you can make sound business decisions based on your financials. And that is accounting, okay? Accounting is also reconciling your accounts. So it's not just your bank accounts. Bank accounts are crucial because people are human and banks are operated by humans, right? We all make mistakes. Banks will make mistakes. A bank, different banks have their own threshold of tolerance, right? So let's say that you actually deposited $55 in your account and they only credited $50. You may not get that other $5 if you don't say nothing, right? Because they don't know. Or even more so, this is what happened to a client of mine. They had 2 fraudulent checks come through their account. One had came through before they started working with me, and wasn't nobody reconciling their account, wasn't nobody doing their bookkeeping. So they never even saw that check came through. They were just getting started in business, and they were just moving right along. And by the time they started working with me, it was like 60 to 90 days later. A second check had came through though, and I caught that second check. And so they were able to get their money back on that cash check. But that first one, they were not able to recover because the statute of limitation time had ran out from the bank. You have only so many days to report fraud, and they will return your money. Because they didn't report it within that time frame, I think it was like 30 days, they had to eat that check. That check was upward of $4,000. It was either the $4,000 check or the $6,000. I'm having a brain fog, but those were the 2 check amounts. I just can't remember which one actually cleared and which one didn't. I think the 6,000 is the one we caught, and the 4,000 we did not. Because a lot of times with fraud, they'll start with a lower amount to see if it worked, and then they go big, right? But they didn't know what was going on because wasn't nobody doing their finances like they were supposed to. The person that was in charge of that dropped the ball, and therefore that was a loss they had to take. They wrote it off, of course, but $4,000 is no money to play with. You hear me? That was a lot of money that could have been put right back into the business to make more money, right? So reconcile your bank accounts. Okay. And then reconcile your general ledger accounts. So that's your chart of accounts. That's another name for your chart of accounts. Each one of your accounts, whether it's an asset, a liability, an equity, or even sales or revenues, expenses, cost of goods sold, look at every single account. So we call that a CFO review, okay? Because as an accountant, that's called a chief financial officer. That's what chief financial officers do. CFO review is they look at your numbers, but part of that is reconciling your accounts. Because again, not only are you looking to make sure that everything is classified consistently, everything is classified correctly, that's the only way that you really could catch fraud. Okay, we all would love to give everybody the benefit of the doubt that they will never steal from you. You know, they're a good person, they're a good employee, but sometimes desperation will cause a person to do things outside of their character. If you're not reconciling your accounts, you may miss the fact that there's fraud in your financials. Okay, and then that's more money lost. So be mindful of that. As part of your accounting process, you need to analyze your numbers, but you also need to reconcile. You want to reconcile first so that when you analyze your numbers, those are true to life numbers. Those are actual numbers in the correct expenses, and then you can see where to pivot. Like if you're having a loss and you want to have a profit, right? What can you cut back on? You want to look at which account are you overspending, what's required, what's not, where can you cut back on? That's where the bookkeeping comes into play in analyzing those numbers as well. So it's not just comparative to plan for what's to come, but it's also will allow you to see where your money went, right? Because sometimes you just don't know, especially if you're knee deep in making sure that the business is running, that the business is thriving. You may or may not be looking at your financials, okay? Now, reporting. There are reporting requirements in accounting specifically for publicly traded companies, okay? They're required by the SEC to report and publicize their financial statements, okay? They cannot receive shareholder contributions. They will not be in good standing if they do not make their numbers, their financials, the payments out, the dividends they issue, all of that stuff is for public inspection, and even more so if they're trying to do a capital call, right? If they're asking for more investments and stuff like that, Okay, so you have to report if you are publicly trading. Otherwise, the reporting is internal versus external. And then advisory. So, as an accountant, right, we look at your numbers, analyze your numbers, and advise you on what we see. So, this is a perfect example of when I first start working with one of my restaurant clients. They were not making a good profit, and I was trying to figure out why. So I did the metric on it and found out that their cost of goods sold was almost 40%. Payroll is expected to be around 40 between benefits, wages, processing, things like that. Taxes, you would expect wages or payroll to be 40%. But let's do the math. If payroll is 40%, but then cost of goods sold is 40% of income, that only leaves 20% for everything else. How do you operate a business like that? You really can't, right? So when they brought me on as their accountant, I analyzed the numbers and I saw exactly what the issue was. They were spending too much money on cost of goods sold based on the prices that they were charging. So it was twofold. They were advised by me to not only change their processes from when they go and purchase their products to sell, but they also had to increase their prices because the markup wasn't enough to cover the rest of the expenses, the operating expenses like the rent, the insurance, utilities, right? The packaging, things like that. It just was not enough. Okay, so it was time for them to increase their prices, but then also cut back on what their cost was. They were overspending and didn't have to. So that overspending was cutting into their profits. Okay. It allows you to see the company's position. So if you, an investor, when you go and try to purchase anything, whether it's a vehicle, a building, more products, try to get a product on credit. So remember, we were talking about accrual. If you're asking for someone to put up some money before you actually could pay them back, they want to know what your numbers are. They want to know before they give you their money that you can afford to pay it back. And what is your pattern of paying it back, right? What is your pattern of collections? What is your pattern of sales? So that's where these reports come in. That's where accounting comes in. And that's where an accountant comes in. So if some accountants, so a CPA is an accountant, right? Certified public accountant. A lot of CPAs do not do bookkeeping, okay? So, and then there's also CPAs that don't do taxes. So CPA is like most licensed careers where, like, even with a doctor, you specialize in a particular industry or a particular method of medicine, right? Accounting is the same way. Okay. When you become a CPA, you could focus on a particular set of activities required by accountants, right? So you could just do auditing, for example, that only a CPA can do, right? So me as an accountant, I am not a CPA. I cannot do auditing. I could do reconciliation. I could do forensic reconciliations, but I cannot sign off as an audit that these were audited by or reviewed by an independent accountant. Okay, I can sign off on your financial statements because I prepared them. And I've actually have signed off on when people have bought houses, to say that these numbers are correct based on what's prepared by me, right? To show, especially if that's their only source of income is their business, then you want to have your accountant sign off on your financial statements, which makes it more credible, okay? Now, there's also something called a full charge bookkeeper, which is a combination of bookkeeping and accounting. So we're full charge as well. So we could do your bookkeeping, we could do your accounting, or we could do both, right? So We do full charge for some of our clients. Some clients we just do bookkeeping. Some clients we do payroll. Some clients we only do their taxes. But as an accountant, we have as a full charge accountant, we have the ability to take on all of that. Okay. So that's the value of accounting, and that's the difference between your bookkeeping and accounting. Accounting is overseeing what's been entered so that you can make sound business decisions based on the numbers. These are actual numbers, not what you think or projected or anything like that. Now, financial statements. What are financial statements? These are the most common. There are 5 that some banks will require, but these are the major 3. So financial statements shows your company's position, okay? The health of your company. There's the balance sheet. The balance sheet, that's what we went over yesterday, is your assets equal your liabilities plus equity. Or if you're trying to figure out what your equity is, then it's assets minus liabilities equal your equity. But it's as of a period of time. It could be the end of the month. It could be the end of a year, right? But it could be an end of a quarter. It's for a period or a specific date in time. Whereas a profit and loss is your profitability. Okay, so those are your revenues minus your cost of goods sold, which is your true revenues. If you require cost of goods to make the revenue that you have, basically without the cost of goods sold, you wouldn't have any revenue. So your true revenue when you're dealing with products is the gross profit, which is the revenues minus cost of goods sold. That's your true revenues, because it costs you that in order to make that money, okay? It's also for a period of time, but not a specific date. So you can say, I want to see my number. So again, this is where using an accounting system come into play. You can say, run a report for the month of November by day or by week. And you can look and see what income came in, what expenses went out, okay, for that week or for that day, or how does the pattern look throughout the month, right? A lot of times companies don't look at the per day or per week. They'll do month to month or quarter to quarter or even year to year. But your profit and loss is in essence your gross profit minus your expenses, okay? And it is as of a period of time. So it can be a range or it can be as of. So you could do year to date, for example, right? But it is definitely the profitability of your business. And then the cash flow statement. So a cash flow statement is always measured in accrual basis. So it looks at your investments, it looks at your receivables, it looks at your payables, and it allows you to see how your money is flowing, thus cash flow, right? How are you collecting? How are you paying your bills? What investment? It kind of shows your liquidity, okay? So for a bank, a lot of banks will ask you for a cash flow statement. Investors definitely ask you for a cash flow statement. Some banks will only say, give me your balance sheet and P&L. And what they're looking for is to see how much debt you have, so your liabilities, right, to see if you can afford it. But then they're also looking at your profitability, because your sales is irrelevant if all of your money goes to expenses or you're spending more than you bring in. Hopefully that makes some sense. But you want to be mindful of, and you want to get in the habit of running your financial statements and knowing your numbers. So real quick, I think I have a poll on that. Let's see something here. Will it allow me to do the poll? I want to launch a poll real quick. I'm going to leave it on that slide. But the question is, and please participate, how many people have an accounting system? Say yes or no on the poll. Remember, participation is key. Miss Arlene, can you do the poll? You should be able to click a yes or no.
Okay, I
That's it.
did it in the chat. Where am I supposed to do it at?
Do you see a poll on your screen?
I see it's showing me the financial statement, but it's not. I don't see anything that's giving me a
Okay,
poll.
are you joining from your phone?
Yes. Do I need to be on the computer?
No, you don't have to be, but that could be why it's in another one of your screens. It's
Okay, let me turn
hidden
it
behind.
sideways. So let me see if
Yeah, so
that happens.
I'll count that. That's fine. Okay, and you said no. Okay, so
Oh,
quite a few,
okay.
almost 100% of you have said no accounting system. Okay, so let me reiterate. So I'm gonna go ahead and end the poll. Thank you very much for participating. We have one person that did not. It's okay though. But let me tell you again the importance of an accounting system. So these three statements, it allows you to run your numbers and see exactly where you are in your business. Okay. How do you continue to plan? Remember, I talked about making plans, making goals, putting dates to them. How do you know if you have already reached your goal or not if you're not looking at your financial statement? Because financial statements tell a story, and it tells more than just your money spent. It tells me as an accountant, I've been doing this a long time, number one, where your money comes from, but how you're spending your money. Okay. So sometimes it's not just about the finances. Sometimes it can be about, I don't know, I've been guessing in my that's the point. That is the point right there, Kevin Skipper. He said, I don't know. I've been guessing and mostly wrong. Yeah, without financial statement, you don't know. And that's the reason why I say you cannot run your business from your bank account, because your bank account is only going to tell you here and now. Like your focus is going to be how much money do I have to spend? It's not going to be what did I make in January? We're in December now. What happened in January? What about February or March? Did I peak in June? Did it slow down in July? Because just because the industry may peak in a certain month, that don't mean that your business did. Okay? So it's accounting software out there that is very inexpensive. It is a business expense that you can write off, and it's worth the investment. Okay? Especially if you're trying to take your business to the next goal to get finances or financing if you don't have these reports to share with them. So, perfect example, during the pandemic or when the pandemic hit, my business pivoted by helping people get these statements because that's how people were getting the money. You had to know what your numbers were in order to do the PPP loan to see if you qualify, and in order to do the EIDL loan, or even to get your own loan through your own personal lenders and all that other stuff, you have to know your numbers, even for yourself. You may think you could afford to pay something back, but without looking at your numbers and knowing what is to come, because you can see a pattern, right? You may can't afford to pay it back. You might have could last month, but that don't mean you can this month. But you'll know that if you run financial statements. So I am very pro QuickBooks because it's user friendly. Like I know there's other software out there like Xero is not user friendly whatsoever, period. Okay. There's Mint, there's other apps. So many people are coming up with financial apps. Okay. Whatever apps worked best for you, as long as you can run these three reports, then it's serving a purpose that you need in your business. Okay. That's the main thing. You don't have to use QuickBooks. I think their lowest one, and they just had a price increase. I think their lowest one was 25. I think now it's like 35 or $40 a month. But is it worth it to know what your numbers are, to be able to plan accordingly and know when to borrow, when not to borrow, and things like that? You can make better decisions in your business by knowing these numbers. Okay. So don't run your business off. What did you say? Well, guessing. Okay. Because guessing, you have a 50-50 chance of it being right or wrong, right? Running these financial statements, they are actual if the numbers, if your bookkeeping is right. Okay. Those are actual numbers, actual spend, and you'll know exactly where your money is going. You'll know exactly where you could cut out some spending as well. Okay. So the same company I was talking about with the 40% cost of goods sold, it's like once I showed them the percentages, it was like every time the wife, because she did the bank runs, every time she wouldn't did a bank run, she stopped at McDonald's or somewhere else. She had to cut that out. That was cutting into their profits. But you don't realize that you spending $2 here, $3 there, going to get a Starbucks here, Starbucks there. That adds up. Okay. Like even when I worked a 9 to 5, I bought my lunch 3, if not 4 times a week, because I know I was only wanting to spend or treat myself one day out the week because it was a $20 spend. Imagine if I bought lunch every day. That's $100 a week, $400 a month. Plus I'm buying groceries for home. That's crazy. We're not doing that. We don't give away money for free. Okay. So we're not doing that. But if you don't know where your spending is, so although I'm talking about it from a business perspective, use it in your personal as well. Because where's your money going? I had to, in the beginning of 2023, I intentionally looked at my numbers for 2022 and said, I need to cut back in this area right here. And that was in my dues and subscriptions. You may have heard me say before, especially those that work with me, I would see something and like, I need that, and I will buy it. Okay. I would subscribe to it, brother. It's a membership. Not knowing the membership I already have, do the same thing already. I wasn't using the memberships I had to their fullest capability, number one, but I was duplicating. Even this year, so I intentionally cut out and went through, say, well, what does this do? What does this do? Oh, they do the same thing. Which one do I need more? Do I get better value out of that one than this one? Okay, let's get rid of that one. But this year alone, I signed up for 3 different credit reporting monitoring companies, unintentional. Right? Because one was tied to another membership type thing. One was tied to, it was something that popped up on my credit. And I was like, what is this? But because it came from a notification, I went to them, right? And signed up for their membership. And then I already had one because that's part of my business expense. My business is my bread and meat. Okay. My business supports my business, it supports me, and it supports my nonprofit, Beat the Streets. Okay. So I have to see where my money is going at all times and where I could cut back. And it was in my dues and subscriptions. I could definitely cut back because I sure don't need to hear that, that this credit line went up or down or whatever from 3 different people. No, one to tell me that. Right? So be mindful of your spending, and it's easier to do that with a software. They even have, and I say pro QuickBooks, and I'm very pro QuickBooks because they have other capabilities like tracking your mileage. If you go meet clients, real estate investors, you going around, driving around, you're traveling to search houses and looking at neighborhoods and things like that for investment properties. All of those miles you write off. Right? So QuickBooks has a mileage tracking system. They also have it where you can take a picture of your receipt and tie it directly to the expense in the system. You can take a picture of an invoice, do the same thing. It's just they're making it very easy. And of course, they can continue to develop. So find an accounting system that you like that can grow with you. That's another thing that I like about QuickBooks is that it can grow with you. As you grow, it can grow with you and serve the purpose that you need it to serve. But know your numbers. That's the takeaway. Okay. Now, balance sheet. The primary focus of a balance sheet is to assess the stability or solvency of your business. So one thing I always say, if you're looking to close your business, never, never, never just close it and not profit from the close, okay? Everything you have in your business, so you remember when I was going over assets yesterday, I said everything in there had a value. They could be converted to cash. Okay, so whether it doesn't have to be a physical product that can convert to cash, so does trademarks, and you could sell the use of a patent or sell the use of a trademark or a logo, things like that. Websites, because now websites, people are buying websites to hold them hostage to be able to, if you want that website, they do the .com because that's the most common, where you're left with .info or .net, ones that people don't even think to use, right? And then they go to look you up on the website and your .com don't exist because they just bought it. They don't have anything tied to it, right? So the balance sheet allows you to see how stable you are. It's your equity section that shows your skin in the game, but it evaluates your performance over time, okay? You definitely can use it in your decision-making. Like I was saying, if you know you have high liability, will adding another loan be an asset or a liability? So let me stop right there. If I get a loan for $10,000 to buy product, is that an asset or a liability? Put it in the chat. Just type A for asset or L for liability or type it out. Is it an asset or a liability? I'm borrowing $10,000 to buy products. Okay, so I have one liability. Okay, liability, that's a small L, I'm assuming. Okay, liability. Anybody see it as an asset? So remember we was talking about mindset. I'm about to change your mindset. It can be both, but it's really on how you use the money. Okay, correct, Kevin. So it's really on how you use the money. It's an asset if I take that $10,000 loan, I buy products, the products is going to yield me $20,000, but the loan is going to cost me not just the amount that I borrowed to $10,000, but another $3,000, right? So all in all, it cost me $13,000 to make $20,000. Okay, that's a $7,000 profit that did not come out of my pocket. Is that an asset or a liability? Was that $10,000 an asset or a liability? Everybody that said it was a liability first. Now, okay, so you see that as an asset now. Asset, okay? Asset. So now you see the concept. So it's about mindset, right? Now, let's say that I got that $10,000 loan to pay off other debt, but my interest rate is going to be lower. Is that an asset or a liability? That was a trick question. It's a liability because you're not going to make anything off of it. You're going to save something off of it. So an asset is something that you could convert to cash. Remember? So in the example where I said borrowing $10,000 or using somebody else's money to finance what I'm building, and what I'm building is going to make me money, it's an asset. It will only be a liability if I don't use the money to make money. Okay, does that make sense? Put a 1 in the chat if it does make sense. Put a 2 in the chat if I need to give another example. I have the same 3 people responding. Can I get more participation, please? Put a 1 in the chat if it makes sense. Okay, now that's fine. That's better. Miss Arlene, I got it. You got it. Good. Okay, so your mindset about money matters. And if it's going to accumulate more assets for you, right? Inventory is an asset. It's actually on the balance sheet. Or even if it's on the P&L as cost of goods sold, it's going to make money. And remember, I gave an example yesterday about the soap, right? Where, you know, the scraps from the original bars of soap, they melt down and make more soap, but they were donating it, right? That became a liability for them because they were giving it away. Something that cost them money didn't bring them money. So you look at it that way. Use other people's money to grow your business and to grow your dream. It's an asset because of what you're going to get from it. Okay. It aids in the decision making for projects, for sure, definitely for investments. So whether you are an investor or not, whether it's in stocks, bonds, real estate, whatever, anything that you're looking to get in financing, look at your numbers. Make sure that you could afford it. Make sure that it makes sense. Make sure the timing is right, right? Because why get a loan? And actually, that's twofold. Because I hear and agree that the best time to ask for money is when you don't need it versus when you do need it. That's a fact. Because when you're in the need of it, the desperation kind of kicks in and you settle for anything. Whereas if you don't really need it, you don't settle for the okie doke, right? That urgency isn't there. And people can sense urgency, right? And there's some people out there that will take advantage of your urgency, right? But knowing your numbers, now would be a good time to get a loan because I know in the next 3 weeks, 4 weeks, 6 weeks, I have to make this big purchase and the rate's going to change or it might go up. So timing is crucial in looking at your numbers as well and or getting a loan as to see whether or not it's an asset or a liability, right? And that's where lines of credit comes in, right? You qualify for a line of credit, you don't pay nothing until you use it, right? So that's where having a line of credit could be more beneficial than a loan, right? But you could get a better rate on a loan, which is good if the loan is going to yield you money now. Otherwise, perhaps a line of credit would be better because then you already qualify. You know what you have that you could spend. You know how you could use the money and plan it, right? Versus having an urgency, can't qualify later, things happen. Now I'm in a desperate state, all of those things, okay? Your balance sheet defines your credit worthiness, okay? Banks are gonna look at how much liability you have versus equity. They're gonna look at how much cash you have in the bank, right? How much reserves, right? Even when you go rent an apartment and stuff now, they want to know that you have or that you make 3 times the rent. Because life be lifing out here. They want to know that you have some reserves, especially in the mortgage. You got to have a couple of mortgages set aside, whether it's in the 401k, access to, right? So in business, remember I was talking about anything that's an asset can be turned into cash. So they look at that. So your balance sheet speaks volumes as to your credit worthiness, okay? And it definitely supports the confidence of any investor or banker that you can afford the loan. They will get their money back. A lot of times they'll do it anyway if there's equity involved, like property and stuff, because they could just take the property and it still will have value and stuff like that. But like for products or service-based business where you're financing AR and stuff like that, you don't know if you're going to collect it, so neither do they, right? But your balance sheet tells a story. It definitely identifies your credit worthiness and your risk level. Okay. These are sample balance sheet and P&Ls that I'm about to go over because I want you to see them in real time and I want you to see them how I use them, right? So any account, any bank account. So remember we went over assets, it's cash. So it could be bank accounts, it could be savings accounts, it could be money market accounts, whatever account that you actually have business transactions going through, you should have it on your balance sheet. Okay, it should be connected to your system. Okay. Now remember, I said I'm cash based, but remember, I always say I always carry a AR. It's because it's our culture, it's our model. And God's timing is always on time. When I need, it comes. Okay. So as long as I have somebody, long as somebody out there owe me, then I have access to money. That's how I look at it. So I use my accounts receivable in that manner. Okay. I sell books. I am an author. So I actually have inventory. Although I'm a service-based business, I do have inventory, okay? Because I sell books. And then any other current assets. So of course, this was many years ago, and I did fudge the numbers. These are not my actual numbers, but I wanted you to be able to see what it looks like and what you should see no matter what you have on, no matter what business or industry you're in. These are common assets that you should have in your financial statement. Now, can you create a balance sheet in a spreadsheet? You can if you know what you're doing. Right? Because I've recreated balance sheets and profit and loss statements from bank activity, but you have to know what you're doing. That's where an accounting system comes in because it's electronic. It does the work for you. It does comparables and stuff like that. Much easier to do with an accounting system than without. Okay. This is the other side of it. The liabilities. So there's current liabilities and then long-term. Remember, we had talked about that. Current liabilities are like your accounts payable. Sales tax can be a current liability as well. And it should be because you have to pay that within a year. Even if it's at a year, it's considered a current liability. You don't have over a year because then it's late. Okay. Your capital stock is your investment. Okay. Any money that you take out, right, is your shareholder distribution or contribution. Contribution is money you put into the business. Distribution is money you take out. Okay. Retained earnings. Retained earnings is the life of your business. So every year that you're in business, your numbers, your net income is going to add to that. So for year 2018, in this example, I started the year with retained earnings of $11,736, but because I had net income of $48,000, my retained earnings is now going to be $59,000. And if I add the other 600 and the 700, it's going to be 60,000. But you get the example. Right. So retained earnings, a banker or an investor is definitely going to look at your retained earnings to see if you got to the positive side. So remember, I was talking about the 5-year expectation of a business life. Companies expect that you will kind of turn and be able to pivot, or your retained earnings should be increasing as your business continue to age. So, like I've heard people say, oh, I started my business to save on taxes so I can have more write-offs or whatever. Okay, but you're in business to make money. If your retained earnings, and that's why they also want to see a couple of years worth of financial statement because they want to see what was your retained earnings before and what is it now? Did it increase or decrease? Is your business making a profit or is it making a loss? Because just like tax laws change, your business change every year because life changes, right? Everything is expensive now post-COVID compared to pre-COVID. So with that, they want to know, how are you adjusting, right? So it's not necessarily a bad thing if your retained earnings is negative, right? Or that you haven't been making a profit. They want to see, is it changing now? What is your activity now? That was what has been going on because one year you might have had a profit and then the next year it might have went down. So like a lot of businesses, because they had to close in COVID, their retained earnings is going to be low because any money that they got out from a loan or anything like that, that added to the asset, to the cash, and then it added to your liabilities. It didn't touch retained earnings, right? If you use the loan to buy or pay for expenses and stuff like that, it's a negative. There was no income against those expenses. It was only expenses. So they would expect to see, especially now, post-COVID, that you may have a negative net earnings. But what are you doing differently is what they want to pay attention to now. And that they would look at your profit and loss, okay? Which is also called your income statement. So the primary focus of your income statement / profit and loss is to evaluate your performance over time comparatively. So remember I was talking about you compare month to month, quarter to quarter, year to year. Is that kind of comparative. So again, as an example of COVID, right? They're going to see, or they want to look at, how did you recover? Okay, because everything happened to everybody in COVID. So there's a level playing field. Some businesses did thrive in COVID, but now that COVID is over, that bubble has been bust. And are they now maintaining what they acquired in COVID? Because the beauty industry exploded in COVID. But now people is going out and about. They could go to their favorite store that they once got their stuff from. Are you still thriving, right? Or did the bubble burst? So they want to see those type of things, the comparability, right? It also tells them how you make decisions. How do you spend your money? How do you strategize? How do you control your costs? It tells them all of that. Remember I said earlier, your profit and loss or your income statement tells a story. And it's not just how much money came in and went out. It actually says your spending habit. That's a mindset, right? That's a leadership. It tells a person exactly how you do business, okay? And do you spend more than you make? That's a mindset, okay? So all of those things, they get that simply from looking at your financial statements. That's a whole lot, ain't it? It allows you to see revenue growth and your expense management, as well as your profitability. Are you making a profit or a loss, right? From month to month. If you have peak season, so for me as a tax preparer, I normally have a peak season March, April, and then again, September, October for the 6-month extensions, right? Because we do business taxes, that's the March deadline. If it's a partnership or S corp, because you have to get the K1s to the partners in order for them to do their personal returns by the April 15th deadline. So if it extends to September and October. Well, California, with our crazy weather, not only did they extend it twice, they extended it on the day it was due. They extended it another month. So where I normally had peak seasons, I did not, okay? Because I attract those that don't like to file taxes, that haven't filed taxes in years, and that's fine. That you're safe with me, right? You're in a safe space when you come and work with TLJ Professional Services. So that wasn't the issue. But the problem is, well, it wasn't a problem, but it allows me to see their trend, right? It allows a company to see the trend. And yeah, I forgot where I was going with that. But in any case, allowing yourself to run comparative income statement, profit and loss statements, it allows you to prepare for what's to come. Okay. So with my tax return, that's what I was saying. I didn't have a peak season this past year because of our crazy weather, and it kept extending. And because I do work with those type of people, they wasn't in no rush to file. Hey, we had an automatic extension. They waited to the deadline, but then the deadline got pushed again. So I didn't have my normal March, April, because it was extended way back in March that we didn't have to file till October. It was actually extended in February that we didn't have to file till October. But in October, it extended again. And it didn't just, this was the crazy part that they didn't even think through when they extended, because they extended the businesses and the personal to the same deadline. How is people supposed to get their K-1 and file at the same time? If the business is just now filing today, how am I supposed to file today too? And I'm just getting my K-1, right? Things like that. It was just crazy. But this past year was crazy. I did not have a peak season whatsoever. So this particular year, 2023, is going to be not an easy comparable metric for me, okay? Unless we have something crazy going on in 2024 and they become comparable together. It's kind of the same thing with COVID. COVID was an unusual happening. So the numbers and stuff that you see in COVID is not real life. It was actual during that time, but it will not stay because everything changed post-pandemic, including our costs, right? Everything is more expensive. So things like that. Your business is not and apples to apples. You can't do apples to apples when you have things like the pandemic happen, or in our case, with the tax return, being extended, and then extended again, right? It's very hard for me to compare my monthly trend against my prior year or even next year. If they don't do that again, then 2023 is an isolated year that I won't be comparing to anything. I'll compare 24 to 22 tax year, okay? But it definitely assures the confidence in your financial health for your business investors and shareholders, okay? And again, that's how I was able to pivot in the pandemic, because people didn't have their numbers together. They didn't have these reports. So that helped me in the pandemic. But then because they saw the value in knowing what those numbers were, what it means, they kept me as their bookkeeper, right? Or full charge bookkeeper. So now they know their numbers every month or every quarter, depending on which package they got, right? But once you see the value, it's hard to go back, okay? So you have to see the value. Here's another example of the profit and loss. So I wanted to show you this because I have several streams of income, right? And I want to see which stream is making me the most money, right? So my book sales, remember I said I had cost of goods sold. I made $60, but I also still got books. So my profitability is still coming year after year after year. That's my blessing with that. Event income was the same thing. So you'll see when I skip to the next page, the event cost me way more than the $200 I made. But guess what? It allowed me, it became like marketing, because although people didn't buy at the event, they may have bought later on. They may have become a client the year later when they could afford to, right? But it gave me an opportunity to showcase and let them see my value, right? The value that I could bring to their business, right? So although it looks like it didn't make a good profit on paper, it's making profit year after year after year, okay? So it's the whole value of the client, not just that one year, okay? So bookkeeping income, commission as a licensed life and health agent, I get commissions, right? Tax prep. But it allows me to see where the bulk of my money come from. What does this tell me? It tells me that my recurring income can sustain my business. Okay. That I'm not looking for my book sales to make me rich, right? I'm not looking for even the commissions to make me rich or even the tax prep, right? My bread and meat actually comes from recurring bookkeeping. That's where I earn the most money, but then that's also one of the most sought after services that we have. Tax prep is one time a year. Bookkeeping is over and over and over. That's why it's more value, right? So it's things like that to look at. Now, I give discounts. I want to track that. So I want to know this is what my actual income is, but I give this percentage in discounts every year, right? So I run this report in my accounting system with my percentage of income, and then it tell me exactly how much in discounts I gave out. I don't want to give out more than I make. Remember, that goes back to the soap example, okay? And my cost of goods sold. Now, in this next space, this is what I was talking about. The event cost me $4,000. One client can cover that cost, right? I only made $205 in actuality in that year. But then next year, that one client that came to the event became a client, and they've spent X amount of dollars in the year. So was the event worth it? Yes, it was. Maybe not in that year that I threw the event, but overall it does, okay? I have a lot of expenses that I list because I want to see, I want to be able to say, remember I was talking about dues and subscriptions. See, it was low then. My continuing education, I always spend on my education. So that's going to always be high. I plan that. So part of breaking out all of these expenses this way and not lumping them together as just business expenses or miscellaneous expenses. Number one, miscellaneous expenses will get you audited. Okay. Because they want to know what's in that. You know, that's like throwing a blanket over a pig and saying it's a dog. Right? They want to know what's under that blanket. Okay. So it's not a bad thing to have a lot of expense line items if it's valuable to your business. So all of these things matter. Advertising, I always give back, mostly to my charity, but I give to other charities as well. I have a soft heart for seniors, pets, and babies. Okay, they're the most vulnerable in the world, and those are the ones that I have the softest spot in my heart for. So I give to charities that help them, right? Computer and expense, continuing education, like dues and subscriptions. Remember, I was talking about that. Fines and fees. I want to know what I'm paying in fines, right? Insurance, because you got to have insurance. Insurance is that just in case, right? You want to make sure you have insurance. Got to maintain my licenses. Marketing and advertising are two different things. Okay. Advertising is like a promotion. You have an ad, you put it out there, it runs for a period of time. That's a cost that you may or may not incur. Marketing is like your branding. It is things that you can utilize over and over and over, like your logo, like your website design, things like that. So marketing is a little bit different than advertising, but I have seen chart of accounts that have advertising and marketing together because it's one and the same to them. They don't track it separate. But because I went through branding, of course, I wanted to see that. I wanted to see how much I was spending because I was getting my brand out to the public, okay? Meals and entertainment. I meet with clients. I give clients, right? Mileage reimbursement. So during those years, my vehicle wasn't owned by my company. I was using my personal vehicle, So I had my business reimburse me a certain mileage or stipend in expenses for mileage, right? And then I didn't have to track it. It was a stipend. Okay. Office expenses, parking, postage, professional fees. I'm gonna always hire somebody, and I don't know what I'm doing. That's part of marketing too. I hired somebody else to do marketing for me, right? Merchant fees, QuickBook fees, all of these. If you take payment by credit card, so whether it's Stripe, PayPal, Etsy, Shopify, all of them charge a fee. That's how they stay in business. But I want to track what that is, because that is definitely an expense that I control. I could change merchant providers and lower my costs of processing fees. Okay. So again, that's one of those things that you want to track separately, right? So your list or your chart of accounts, your expense list should encompass what's valuable in your business. Okay, so my chart of accounts may not fit yours. These are common expenses, so they can. You may or may not spend money on these things, but you definitely can. Okay, because these particular expenses can be in a real estate business, is in my accounting business, it could be in the tax business, it could be in the real estate investor business, right? All of these type of expenses. Taxes is our annual franchise tax fee, telephone, right? Travel. I travel all the time for speaking engagements and stuff like that, as well as wellness, right? And then the website. I specifically put my website expense separate because I want to see, because I could change my hosting company, right? And I did that. When I was looking at those expenses that I had, I moved from ClickFunnels to ClickSlow, right? To save me costs, because ClickFunnels was like $100 and something a month, where I could have paid with ClickSlow. I paid like $500 for lifetime access. Why do I want to keep paying? And just recently, I cut out a tax planning software I had been paying for a couple of years, $1,000 a month, but wasn't really beefing up my tax planning side of things yet. So I just gave them money. It was crazy, just crazy. But I had to see that in writing, right? For it to kind of slap me in the face. And then when you throw those percentages on the side, it's like, dang, I put that much percent into that. That's crazy. No way do I want to spend that, right? So knowing your numbers, running your expenses, bookkeeping. So this is bookkeeping, and this is a perfect example of making decisions, right? So let's say that I had some of this expense in continuing education. I actually had it in insurance. I might change my insurance carrier thinking I didn't overpay for insurance, when in actuality, it was education, right? So having things in the right bucket matters. Now, you don't want to create a GL account for every single expense that you swipe a card for. Like if you're, let's say that you are a restaurant and you know that you have to buy like the packaging, right? Your styrofoams or whatever, and the foil and all of that going to cost of goods sold. Don't create no GL called foil and then one that called packaging and then one that called, no. Lump that together. So it's not to say have a whole list of duplicate, right? None of these are the same except for marketing and advertising can be put together. Other than that, no, these are things I want to know. How much am I spending on parking, right? How much transportation costs do I have? How much gas? How much? Those type things, right? So be mindful of your chart of accounts, but you definitely want to track it. How are you going to run this report like this through a bank account? How are you going to track that like that from month to month or year to date, right? Without it being some big to do. Now, if you are Excel guru, you can definitely set up your Excel to run profit and loss statement, to run a balance sheet, stuff like that. But you have to be very good at it with pivot tables and all of that stuff. But why? When you can just invest in a system that does it for you. And it's its job to do it, right? Now, statement of cash flow. Statement of cash flow evaluates how you manage your cash resources, okay? How much money, how much credit are you giving out? accounts receivable, right? How much credit are you allowing your clients to get away with, right? Are you tracking how long it takes for you to collect the money? Are you tracking what's not collectible? Did you write it off? All of those things. Cash flow statements tell you how your money is being used, okay? It is also a measurement of your credit worthiness as well as your liquidity, right? How is your ability to meet your short-term obligations, right? Or even long-term. You can definitely use your cash flow to fund a project. So that's part of planning, right? If you're looking at your financial statements and you run it by month, for example, but you have a project that's coming up, you can look and see from a comparative standpoint exactly when you can expect or how much of the money you could set aside for that project, okay? You can also use the cash flow statement to do that, okay? I don't spend a whole lot of time on cash flow, but this is what it looks like. So it talks about your net income. So that's your profit, okay, from your profit or loss. It talks about any adjustments for your outstanding receivable because you didn't make that money, right? That's something you lent out on credit. So that wasn't money that you collected. Therefore, it took it away from your profit, okay? Your assets, your inventory, right? You haven't sold the inventory, so it didn't add to your cash flow. It took it away. Sales tax payable. So anything payable was like, okay, that costs some money. This is something that needs to go back out. So we're going to add that because that's going to be activity to your cash, okay? But it also look at your finances. Did you get any loans? How much did you pay back? You know, it'll look at the profitability of your finance. Okay. And then it tells you right here, did your cash increase or decrease? In this example, it increased by $1,700. Isn't that information I would want to know? Especially if I'm trying to do a project or seeing if I'm on track for the goal that I want to achieve. So if my goal is to buy a building next year, am I on track with my finances to be able to buy that building? Yes or no, right? So that's where these numbers are important. Now, this is the last slide for today. The metrics. These are common metrics that you should get in the habit of running every month. If not every month, at least every quarter, okay? What is your net profit? How many people know what their net profit is right now in this minute? Put a 1 in the chat. If you know what your net profit is, put a 1. Otherwise, put a 2. That's 3 of y'all. I expected a lot of 2s. You know why? Because almost 100% of people said they did not have an accounting system or an accounting software. Okay. That's why you don't know what your net profit is. You might know what's in your bank account, but that's not your net profit. What's in your bank is not your net profit. Okay. What about your gross profit? If you sell products, income minus your cost of goods sold. Do you know what your true income is? Got it. Miss Arlene, I got you. Okay. You sell products, you should always know what your gross profit is from month to month because that's your true revenue. Because the thing about it is this, that income wouldn't exist without those products. So an example of that is if you spend $10 on a basket, let's say you sell a basket, You spend $10 to put all the content in the baskets, but you sell the baskets for $15. So you made a $5 profit. That's your real revenue. Your revenue is $5 because it costs you 10 to make it, right? 10 of that 15 don't exist because you wouldn't have it without that product. Okay. So that's where gross profit come in. You actually made $5. You didn't make 15. Okay. The cost of goods sold. So remember I told you you can measure your inventory or beginning inventory plus any purchases. Anything that you add to inventory adds value, right? Minus your ending inventory. That's going to tell you how much was used. If you sell products and more than you manage your products, this is an imperative measurement or metric that you should do every single month. That's the only way you will know if there's damage and didn't nobody tell you about it, if somebody is stealing products and you know about it, because you won't know about it. If you're not measuring what you used, right? Because what you use should tally to the money, okay? Or if you do the formula where you're saying, okay, my inventory plus my purchases minus what I use, so I know we use 10 of them, then my inventory should be Y, right? So let's say I started with 10 products in inventory. I bought 5 more, so that meant my inventory was 15, right? We only sold 7. So 15 minus 7 is 8. That means I should still have 8 to sell. If I don't, what happened? Where's my 8 items, right? If I have 9, then that means somebody miscounted somewhere or something else didn't happen because errors happen. So even if you deal with a cash register at all, there's a such thing as cash short and over, because I don't care what you do. Anytime that you're dealing with currency, meaning dollars changing hands, there's always going to be, it's going to always be off. Sometimes you actually have more than what you're supposed to, than what was rang into the cash register. Sometimes it'll be less, right? But those are the metrics. That particular metric allows you to see if somebody is stealing from you. Otherwise, you won't know unless you catch them red-handed or somebody tell you that they saw them taking something. But if you're not tracking it, you'll never know. Because all you know is, I'm low, I need to buy some more. You didn't look at to see why you're low, or if you collected the money based on what you spent, right? So these are metrics that are extremely important to the value of your business, okay? The profitability of your business. And then debt to income, your liabilities over your income. How much debt do you have against the money that you earn? This is something that lenders look for in investors, right? Your main 3 are the top 3 on top, okay? These bottom 2 are if you're going to get a loan, working capital. So you've heard of working capital loans. They look at your current assets minus your current liabilities, because anything over a year, then you have time. So they're looking at, what do you have right now that could be liquidated, right? Anything that's current that you can liquidate or have cash value already, like inventory, you can sell, right? Minus any liability. So in the case of like a house, for example, if you have a building and your building is worth, let's say $1 million, but then you only owe $500,000 on it, then that's automatic $500,000 in working capital that you could use to make more money in the business. So working capital is the formula used to see how your money turns over in essence, right? Okay. And then the liability, debt to income is, are you using more debt than you collect in income? Okay. So be mindful of that. So I know this is a lot of information and I always go over, so I apologize, but I don't apologize because it's information that you need to have as a small business owner, okay? So tomorrow, we're going to look at wrapping all this up and laying that foundation and look at how it all ties to your tax return, okay? And we're going to look at your business structure and look and see how the business structure you choose impacts everything else. Okay, so that's what we'll be looking at tomorrow. I know this has been a lot of information to absorb. It's not too late to upgrade to VIP so that you could get the replay if you think you need to hear it again, right? You can still go back and sign up for the VIP. No problem, Miss Sherry. Tomorrow is even better because, like I said, business structures it defines what you can and cannot do in your business. Okay, what you can and cannot write off, right? What your tax liability looks like. Okay, how it directly impacts your taxes. And then I have an awesome and fabulous offer for you to work with me tomorrow as well. So this has been day 2 of our business finances mastery, your road to revenue. So everything that we're talking about is a direct line or part of the lineage to leveling up your business. Okay, remember that was my promise on day 1, that you're going to leave this challenge with the information you need to level up your business. Okay, and it's all through your finances. Thank you very much for the compliments. I appreciate it so much, and I look forward to seeing you in class tomorrow. And you'll see in the group, if you haven't joined the group, please look at Business Finances Mastery Group and join the group. For anybody that joined today, it was not here yesterday. It's also in the chat for everyone. So click on that, join the group, because our day 1 winner is Miss Libby Silas. And Miss Libby, I will post in the group. So congratulations to you. I will post in the group what you get, but it will be the 10 deductions workbook. Okay, so this is going to give you a list of 10 deductions that people overlook, and it comes as a workbook. So that should help you in your business journey. So you guys have an awesome, awesome evening. Okay, great. And Miss Libby, you will receive your digital deductions I think it's a worksheet, workbook or worksheet via email or via the chat inside the group. Okay, so you guys have a fabulous evening. Sorry, I'm not on camera again. This is why I did not know how to change me back, to rotate me. Yesterday, it had me as completely black. Today, it got me sideways. So I stayed on this. I stayed on my profile picture because that is so distracting. Okay, so you're in the group. Great. So get into the group and share some wins, share some knowledge that you learned, because that's how you win prizes. That's how Miss Libby won yesterday, because she shared why she joined the group and what she's looking to get out of it. Okay, so participation is the key. We recognize your contributions, and we want to reward you with some little gifts, okay, to help you in your business journey. So you have a great evening, and I look forward to speaking with you guys tomorrow, day 3 of the challenge. So you have a good night.